Okay, so first off, before I get into the video, nothing that I say is financial advice. Nothing is a recommendation for a buy or a sell. It's my personal opinion and what I'm doing. You can do whatever you'd like. So I wanted to talk about the 10-year TLT, the US dollar, and what my opinion is when I think that we're going to cut interest rates. So first off, I just got finished watching a YouTube of this guy who was in shock, and he's like, oh my gosh, I'm selling all my TLT, and he's looking at it on a 1-hour chart, and he's selling a credit spread on it, which actually may not be a bad play there, even though it's going to hardly pay anything. But he was shocked, and it's like people just don't understand how to read the bond market. If you look at the yields going out, the 1 month, 3 month, 6 month, 9 month, 1 year, you can see that where the yields are dropping towards the end of the year. Right as we get to around 6 months to 9 months, they start to just plummet off. They peel off and go off a cliff. And I try to tell these mortgage lenders, because I'm looking at houses and stuff, and they're talking about how they've been in the game for 20 years, but they don't know how to rate that. We're not going to cut rates possibly till 2026, and it's just like it's an election year. Doesn't matter who's in office, if it's right or left, who it is, they're cutting rates if rates are high. That's going to happen, in my opinion. Does it mean it will? No. That's my opinion. My personal opinion, it's happening. This guy on the YouTube video, I'd flame him, but that's a little bit too far, right? He's in shock, and he's, oh, the market's going to fall and all this. Yeah, the market could come down a bit. The market's ripped ferociously. If you look at it, before I move on over to SPY, and talking about how things price things in before it happens, not when it happens, which people don't seem to understand anywhere, is 10 years starting to peel off. Nice bear flag there. Beautiful textbook right here. And it's snapping down. I'm trying to see. Let me go over to a higher time frame here. Let's just take a gander on the weekly real quick. Yeah, it looks like we're going to come down to the 100 over here. And we could absolutely become a lot lower once the Fed comes out and says, in my opinion, the Fed comes out and says, we're cutting to the end of the year, which isn't going to happen in March. I could have told you that before we had this Fed meeting. Didn't happen yesterday. Could have told you that before the Fed meeting, because I know how to read the bond market. It's not. There's a slight chance it could happen in May. I kind of doubt that. June, July, yeah. I think that's when they're gonna cut, and all the way to the end of the year. Every Fed meeting, probably a quarter point. So they may cut 1 whole point, in my opinion, this year and bring the Fed rate down a lot, which is going to drop mortgage rates through the roof. Anyways, we're going to come down quite a bit, and I think that we could come down to a median right around this level, right around these EMAs, all in here. This is the range that I'm seeing. All in here is where the 10-year could come. Let's go ahead and lower this a little bit. I think we can come right down into this range right here. So I want to pull up TLT, and then I want to talk about the S&P, and then I'd also like to talk about how things react. Right, we can use COVID as an example on huge mistakes, and this guy on his YouTube who's got a lot of followers, and it just seems like he doesn't, very nearsighted. I'm seeing a lot of nearsighted things from people right now, but that's because when you don't understand something, the more nearsighted you're going to be when it's a specific event or situation with an equity or a sector. The less you understand, if you understand what's happening long term, you'll be long term. Right? And I just don't think this guy gets it. He doesn't get it at all. But anyways, over here in the green is where we were in quantitative easing, and the red quantitative tightening. Okay? Yield goes up, face value drops. Yield goes down when we cut interest rates, dollar drops, face value of bonds go up. Let's take a look at TLT. Before I get into this, I'm getting off topic. I'm kind of all over the place. Forgive me here. We're going to get back into that, and I'm going to use an example of if I were to be buying right back then before QE, which we're about to go into. The guy's looking at TLT, on a 1 hour, freaking out, selling, oh, it's near the EMA, all this stuff. He's pulling it up on the weekly, talking about the EMA and everything. It's got an inverted head and shoulders on it. If I had a line chart up instead of the candlesticks, I could see it a lot more clear here. It has an inverted head and shoulders. And mind you, it would warm my soul for this thing to drop so I could add more. It'd make me very, very happy. And this guy's calling for this thing to collapse. It's like, well, so I should wait till it's too late and then buy it? Is that what you're saying? Wait till it rips? So let's go ahead and look at TLT on a monthly here. We're going to pull this up on a monthly. Okay, let's take a look at when we went into QE. Let's go, hold on one second here. Let me go ahead and get rid of the watermark since it's getting in the way. Let's take a look at, I don't know, whoops, didn't mean to do that. I don't know if you all remember the fall of 2018 when Powell was raising interest rates. And Trump came out and bashed him and said he should be fired and that they should cut. It ended up being a mistake, but we didn't know COVID was going to happen. Now, think about it this way, and then I'm going to explain some things here. Would it be better to buy when we went into QE, which was right here at the end of December, when Powell made Trump made his comments affecting Powell's decisions? Would it be better to buy on the way up when, okay, they're going to cut, now I'll buy? Or would it be better to buy right here before? This is if you knew, right? We didn't know. But we're just, for the sake of this, we're going to say we know, in early 2019, they're going to cut interest rates. Would it be better to buy when they cut or before? In my opinion, it'd be better to buy. Which scenario do you have more leverage over the trade? I can't average down if I'm buying in on the way up. I want to be red on my first entry, my position. That's what I want. That's how I build a position. Buy a boatload up here and then you're boxed out and you can only average up. And then it ends up sucking back when you average up and now you're red on it when it was higher. I have more control over my position when I buy it over here and I can now box it in a corner. Oh, you're going to go lower. Now I can scale in like 1/4, 2/4, 3/4. I can leave a little money on the table, right? Start buying, nibbling. The lower it goes, and they cut, and I have a full position. Rather than I buy 1/4 and then I can't buy anymore unless I'm averaging up, right? We know they're going to cut interest rates. The Fed said they would. It's an election year. They're going to cut at the end of the year, in my opinion. In my opinion. Something catastrophic happens, they're going to cut. This was a screaming deal on TLT over here. At life support, bullish RSI divergence, a bear flag break, which are usually bottoms, bull flag breaks are usually tops. And I was buying it perfectly all the way down. Right? And I bought it on the way down, and I thought it was going to go a little bit lower. I thought we were going to go into the bottom range of this around 80, but I bought it. It was 86, 87, somewhere around there, 86. Bought at 85 and at 84. Unfortunately, I did not pick it up in the 83s, but that's okay. She rocketed. I'm up through the roof. This guy's over here having panic attacks, buying puts and selling calls on it, and me over here, I'm not touching options on it. I'm not going to do that because it could be another 4 months of rot, of those things rotting. It would have to be a debit spread, but, I want somewhere to fork my money out, and I think, personally, TLT is a great pick for me. And that would be amazing if this thing would come back down. I would love that, especially to that level. That would be just a ballparker, in my opinion. I don't think it's going to happen, though. Why? Because the bond market is not going to wait for them to cut interest rates. Like, okay, we're going to drop until they cut. It's not going to do that. It knows, the bond market knows, imagine it as a person with its own mind, that, which it kind of is, the bond market makes up people with their own minds, and they know, the experienced people, that we're going to be cutting interest rates at some point this year, so it's going to go up at some point this year. So are we going to buy it when it goes up? I wish I could pull this guy on a call, and we could do a YouTube together. No! They're going to buy it before it goes up. Doesn't that kind of make sense? So let's use an example of COVID, okay? There was people that were getting business loans that were refining their house. whenever rates were low and pulling money out, equity out of their house. And they were buying SPY puts. Why? Well, let me pull up SPY over here real quick, because this is going to be a point I'm going to make. I was wrong on this TA over here, by the way, guys. Anyways, let's pull up SPY over in here. Where's COVID? Here we go. Here's COVID right here, where it dropped ferociously. Let's go ahead and make this chart bigger. All right. I have the green. The red is QT, quantitative tightening, green, quantitative easing. So, okay. COVID starts to happen, and I remember this perfectly. It was wild. We knew about it over here, right? This was in we knew about it in January of 2020. I remember this drop over in here. And then the market just started to rally again. And then it's like, wait a second, pump the brakes. COVID's actually going to be a big deal. And we started to plummet, right? Now, all the way down over into here, we had people buying puts at the bottom when the Fed had came out and they said, we're going to be releasing a stimulus package. They're going to be cutting interest rates. They had an emergency meeting, started cutting interest rates, started giving money to businesses to stimulate the economy, and people traded against that. So in the people in their minds, they're thinking, well, supply chains are down, right? They're buying puts that are not hedged with sells, making it a debit spread, right? With IV being completely maxed out, like 500% IV, where the contracts don't have much more room to go, except if you're a seller, you're making a lot of money. And they're on the buy side with IV that high, and they're trading on what's happening in the moment. Supply chains are down. Why is it starting to turn around and go up? It's going to crash. I see 180 incoming. Well, the stock market doesn't necessarily work on what's happening now, this second, right? Let's say something bad happens to an equity. Well, the second there's a light at the end of the tunnel, this will be over in 6 months. It's going to take off and accelerate. The second there's a light at the end of the tunnel, right? There was no light at the end of the tunnel. We're like, what's going to happen? How bad is this going to be? Okay, we're starting to shut down supply chains, right? And then the Fed comes out, stimulus package, cutting interest rates. So then the market's thinking, okay, well, the supply chains aren't going to be shut down forever. So why don't I buy before supply chains open up? Right? On top of not fighting the Fed. So what I'm getting at here is the market's going to react before the matter. And those who bought before they reopened supply chains, right? We remember 2021. So the bond market, TLT, isn't going, I'm predicting, doesn't mean I'm right, just my opinion, not financial advice, that right around March and April, that I predict that the bond market's going to start to take off. The 10 years is going to start to drop. The dollar's going to start to drop, and it's going to start pricing in, even without Powell saying anything at all, rate cuts. And I don't expect Powell to say, we're going to cut next meeting, because that would be the same thing as cutting in the current meeting, because the dollar's going to price that in, the 10-year's going to price that in, and bonds are going to price that in, and the market's going to price that in. So he's going to remain hawkish, in my opinion, and right around May at the earliest. I doubt it. To June, I really, really think we will. July, I'm almost positive that he's going to drop it on us. We're cutting interest rates at a 1/4 point and then kind of stay. We'll judge things from there, but I believe that they're going to be cutting all the way to the end of the year. Keep in mind, Powell doesn't want to come out and be like, oh, we're going to cut interest rates. The economy's going to boom. It's going to be, right? Because that's inflationary. Everything's going to get pumped up. Housing prices are going to go up. Mortgage rates are going to come down. And that's defeating the whole purpose of quantitative tightening. We have paused. We tightened, we paused, and now we're going to go into cuts at the end of the year. But I believe the TLT is going to price that in before we cut rates, probably about a month, maybe a month and a half prior to cutting interest rates. So I'm holding strong in my position here. I believe gold's going to go, crypto's going to go, and interest rate sensitive stocks, Rocket Mortgage, Upstart, Affirm, Lemonade, all those. So if you guys like this content, make sure to like and follow for more. If you'd like to join the community, The link is in the bio.